Good afternoon, everyone, and welcome to Stock Market Today. It's Coram and Ken Shreve here with a breakdown of the action in today's session, where we did see stocks close well off of their lows after a big morning gap down. But was it enough to turn the market tide, Ken? Stocks closing with big weekly losses this week.
Yes, indeed. Just looking at the NASDAQ 100, down close to 6% for the week. SPY down about 5.2%. So we did have a nice close off lows today. That was very constructive. So let's take a look at three stocks. Solar stocks, once again, leading the market today, even when the market was sharply down. We'll take a look at SunPower, SPWR. After that, we'll take a look at Celsius, which is still showing strength and support in an unsettled market. And finally, on Semiconductor. We talked about Wolfspeed yesterday, another chip maker in the EV market on Semiconductor, ticker ON.
Three solid stocks to be checking in on there today. So that coming up ahead. But first, let's take a look at the major indexes. The NASDAQ closing down 0.9% today. We had the Russell 2000 taking a hard hit, on pace for a decline of 1.6% heading into the close. We also had the S&P 500 down 0.7% today, and the Dow off by about 0.5%. So as mentioned, we did close off of the intraday lows, Ken, but we still fell below the low from September 6th as well as July 26th. So let's see here, a low of 11,533. The NASDAQ closing below that level at 11,448. So it's hard to judge here whether this was a true breakdown, since we did close, near session highs of the day, but still a very weak week.
The market, week, yes. Yeah, the market always makes it difficult, right? It's, you think the bottom is going to fall out today after, it was FedEx that sparked the early selling. Their CEO said, listen, all the economies around the world are slowing. We're going to be in a worldwide recession. So FedEx down 20% on that news. So it was easy to see how sentiment was so negative. But, I mean, you have to put some stock in the fact that there were buyers in the market. We did have options expire today. That may have skewed some things, but there were buyers definitely coming into the market late here. So we'll see. It's still a very challenging market. We're going to look at three stocks today that are still, but not even close to flashing sell signals. So we'll see.
Yeah, a couple of bright spots, especially in solar, even though the broad market picture is definitely weakening here. You can see the big outside reversal for the week with the NASDAQ composite, like you said, down almost 6% for the week, big weekly loss. So the trend is lower, Ken, and it does appear that we have a trend line from the highs where we are seeing clear resistance, in addition to now being even further away from that 40-week line, that black line here on the chart, than we were before.
Yeah, even if we were to somehow get some tradable rally, maybe after the Fed meeting next week, maybe the market responds positively. You draw that trend line there, you can see just being below the 40-week moving average where it got turned away from. So even if we were to get a tradable rally, you have to wonder how much staying power it's going to have. It's interesting looking at the daily chart of the NASDAQ, and you see buyers pushing the index up late in the day. You get a close up near session highs, but you look at the weekly chart for the NASDAQ, and it's not a pretty picture at all, getting turned away sharply at the 10-week moving average today. So, the market is climbing this wall of worry. Sometimes this wall takes a while to climb. There's certainly no shortage of negative headlines out there. So we'll have to see what the coming week brings.
That we will. All right, let's also take a quick look at the S&P 500. Same story, outside week to the downside, back below the 10-week line, below 4,000. So it does seem like the news flow right now is pretty negative, but could that mean that we are at oversold levels, or
It,
could we see further deterioration?
Yeah, it definitely could mean that. You look at the S&P 500, even though it rallied off lows, you see that big weekly decline. It was energy stocks that really got whacked. It looked like
Mhm.
these stocks were breaking out of bases, maybe able to provide some market leadership, but these stocks just got hammered today, and big reason why the S&P 500 had a bad week this week. So. We'll have to see. We know we're in a market that's under distribution. We got the seventh distribution day for the S&P 500 yesterday. We're going to have 8 after today. Just looking at higher volume declines, and that shows us what institutions are doing in the market. And we're in a market that's under distribution. Institutions are selling stocks, so it just makes for a better to watch from the sidelines than to try
Mhm.
to go long.
Exactly. And on that note, just how we like the market to pull us in when conditions are improving, we also need to not avoid signals of the market pushing us out when things aren't working. Of course, there are some select pockets of strength, but any recent new buys, especially that aren't working, the hold and hope mentality is too much of a gamble at this point.
Oh, it sure is. The risk level is very elevated. I think next week is going to be very interesting because it's our 2-day Fed meeting. The market has already. I might have misspoke during yesterday's video, but the market has fully priced in now 75 basis points next Wednesday. Pretty small chance right now of 100 basis points, but that's a rising interest rate environment is very very difficult for the stock market, and there's just so many questions about. Yeah, it's likely that the U.S. economy, excuse me, is going to head into a recession, but is it going to be a shallow recession, or is it going to be a long slog? And that's what the market is trying to figure out here. So, looking at today, we're encouraged to see indexes close well off lows, but there's still
Mhm.
still a lot of damage out there.
Yeah, and while the overall trend is looking pretty murky, what we have learned, because we do as active investors need to pivot with the market tide, is that having, if you are going to dabble, having a short-term mindset, or at the very least if you are in those leading stocks, making sure you aren't giving them too much room to the downside, because we're in a market still where stocks really need to prove themselves. And it's been tricky to hold leading stocks because if you try to do that, odds are you're going to get whipped around.
Yeah, and we do follow a general rule that when you buy a stock properly, when it's breaking out of a consolidation and it runs up 20%, that's typically just a great profit-taking signal, because that's around the time our research shows that stocks start to form new bases after a 20 to 25% gain. But yeah, in recent months, it's been very difficult. If you try to have a long-term approach with stocks that you have conviction in, you can have a 10, 15% gain that completely disappears in the matter of 2 or 3 days. So, it's tough to trade the market, but sometimes conditions are so volatile that even if you have light exposure, it's still very whipsaw and tough to
Mhm.
make money.
Yeah, but we've got to continue to keep our watch lists fresh, because when we do get on the other side of this, we want to be at the ready. Now, let's also take a look. You mentioned the rising rate environment. So here's a quick look at the 10-year Treasury yield, dipping a smidge, but right around that 3.5% mark, which is where we peaked out in mid-June. I'm going to go on over to the weekly chart as well. Ken, look at how many weeks in a row we've seen the
That's
10-year yield continue to just go up and up and up.
I think I'm used to looking at the daily chart so much for the 10-year yield, and I'll tell you what, this multiple up weeks in a row, yeah, it certainly looks like bond yields could use a little breather. And back to the daily chart, maybe it comes down to the 10-day moving average, or the 21-day. But you have to ask the question, what is going to be a situation where rates are going to really start to come in precipitously? It just doesn't really make much sense. So I mean, the market would like to see this 10-year yield come down, but Fed's got a big fight on its hand, and fighting inflation, and
Mhm.
more rate hikes is ultimately what's going to cool the economy down.
Yeah, and Ken, I also want to get your take on what we saw with the VIX today, the CBOE Volatility Index. It did look like earlier on in the day we did see a little bump up, closing up just a little bit, but off of its highs. What are your thoughts on the volatility or lack thereof we're seeing
Well,
in these conditions?
we tend to see a lot of fear at market bottoms. I mean, we've seen that decade after decade after decade, and you get a high put call ratio where people are just furiously buying puts because they're fearful. Earlier this week, we had a put call rating that was above 1.1. I think it was 1.12. So we're seeing some fear, but this VIX indicator, the zero VIX, when the market was down sharply yesterday, it barely budged. It inched higher yesterday, and then you had some fear in the market early, but then it just came all the way back down, and ends slightly higher. So it just tells me that we're not really in a fearful market yet, and we tend to see fear at market bottom. So at least the recent action in the VIX tells me that the potential for downside is still there, even though we had a good close today.
Mm-hmm. And a new trick that I learned, courtesy of David Chung on this morning's IBD Live. I was trying to remember the ticker, but I briefly pulled it up here. Just wanted to repeat for those who saw but maybe didn't see. 0 PCVR, put call volume ratio.
Right.
Is
So
how you can see that visual representation there.
Yeah, so you can see it's been kind of trending higher above 1. Typically, really fearful readings are going to be above 1.2, give or take. So we've seen some readings like that in the past. So you can see fear is at least according to this ratio on the rise, just not at excessive levels that we've seen at market bottoms.
Mm-hmm. Something definitely to keep in mind there. And you mentioned a tough week for energy. So I just want to quickly look at XLE here, off by over 2% today. For the week, Ken, we did see a downside reversal because earlier in the week, we were actually seeing a bit of strength in this area, but closing down for the week by about 2.7%.
Yeah, it's just like the market tends to go after everything, even leadership. It just looks like it's there with the oil and gas stocks. But to me, there was technical damage suffered to a lot of these stocks, including XLE. I was watching Comstock Resources, CRK, and just saw all the selling in that stock today. Did close off lows though with the market, so that's good. But at one point, this was down 7 or 8%. And you look at the weekly chart, and it really is, look at this. I mean, it's just really showing a lot of uncertainty in the market. And looking at the weekly chart, it doesn't look all that great to me at this point.
Mm-hmm. Well, thanks for that quick little look at XLE and CRK. Now let's take a look at a name in the solar group, SPWR, SunPower. We've talked a lot about Enphase and some other names in the group, First Solar, Array. But let's also highlight SPWR with an upside reversal today, right around the 21-day line. Some heavy volume coming into this stock earlier in September. So it seems like leadership perhaps not limited to one or two names in the group.
No, I was very impressed with the performance of solar stocks, and so this 27.15 pivot point here, it does look like an actionable entry point here. And I just even when the market was weak today, all SunPower did was just come down and test its short-term support levels. You can see its relative strength line is still holding near highs. So I think this name looks great in the solar group, and your two big leaders, Enphase and First Solar, these stocks just aren't budging. So when you're in a really weak market, it's easy to see leaders like this start to buckle. But at least Enphase and First Solar are, along with several other stocks, still have pretty good looking charts. They're extended, but showing relative strength still.
Well, we'll have to add SunPower to the watch list. ARRY Array, one we covered on IBD Live today. Let's see where it ended up the day. Taking a hard hit in some volume on Thursday, but trying to find support right around that 10-week line. So that could be a very key test for the stock. Will it have a decisive break of that level, or will it use that as a launching pad for a next move higher?
Yeah, I think Array looks a little more vulnerable than the other solar stocks that we've looked at today, but this is just still a test going on at the 50-day moving average. Good to see it close off lows with the market. This one, though, like I said, just looks a little more vulnerable than the other leaders that we've looked at in the group.
Let's also get Ken's analysis on Celsius CELH, down 0.7% or so on Friday. For the week, down almost 5%, but closed off lows. This is a leading stock, Ken, that's still finding support right around that 10-week line, and also that round number at 100.
Yeah, another reason not to get too bearish on this market, because you're still seeing a lot of healthy charts among the market leaders. So back to the weekly chart of Celsius. I mean, this is just technical analysis 101. When you get a nice breakout and then a little consolidation phase, you like to see that stock come right into that 10-week moving average, and that is what Celsius is doing now. So there's just a lot of optimism that this company, still could still be in the early stages of growth. I think that's still a good case can be made for that after their distribution deal with Pepsi. So like the way this is looking, you see volume has kind of dried up in the stock over the past 3 or 4 weeks. So we're just going to wait for renewed signs of institutional buying in this name, and definitely a name I could see on the leaderboard down the line.
Mm-hmm. Yeah, and its prior peak in late 2021 with highs around 108 to 110. That is potentially going to be a trouble spot for the stock to the upside. So if it's going to continue to be one of those leaders eventually after it does take this pause, because what a big move it's had off the lows. Who knows? Maybe it'll need more time to pause. We also need the market to improve to really help power this stock higher, but that would be seemingly a key level to watch on the upside.
No doubt, and you can see the blue relative strength line. Just to the left of that relative strength rating of 98, it's still holding near highs. So, I mean, this is just a stock that we say is flexing its muscle in this market, and telling the market right now, I'm not ready to go down. So, if names like Celsius or Enphase or First Solar, if we start to see these stocks really come in hard and violate key support levels, then you have reason to be more bearish on the market, but still have a fair number of leaders that are holding up here.
Yeah, great point there, Ken. We will continue to monitor the action for these leading stocks because that'll definitely be a signal for what the temperature is in the broad market, if those are also breaking down. And last but not least, let's look at ON Semiconductor, ticker ON, down 3.8% for the week, but also finding support at its 10-week line. And we'll go on over to the daily chart here. It looks like it's had a string of a couple of lows here that it's been able to find support right around the 65 area, a little higher than that. 67 is another spot where it was prior resistance, and now, at least for the time being, looking like support.
Yeah, well, we looked at Wolfspeed yesterday, so ON Semiconductor today. I think these are the two chip stocks amid a lot of selling in that group. Both of these stocks are showing relative strength amid pretty rosy fundamental outlet. Wolfspeed and ON Semiconductor are very, very busy in the EV market with their chips, and they're just seeing a really, really good growth here. So ON Semiconductor's got the fundamentals. I like the look of the weekly chart here. It's not ready yet, but you can see it's still in the process of trying to clear this really long consolidation where you had some sellers get shaken out of this stock. So you had a nice rally off lows when the stock crossed the 50 level and the 60 level, got some volume. So finding support where it should. I still think this one has the potential to be a leader.
Mm-hmm. All right. Well, thank you so much, Ken. And thanks to everyone for tuning in. Before we go, a couple of announcements for you. IBD will be in New York City next week for the Best New Ideas in Money Festival, along with sister company Market Watch. And Wednesday and Thursday, live from the event, we will have our IBD live show, not only for our subscribers, but also the conference's in-person and virtual audience. And we would love for you to check that out. You can go to the Money Festival website for more details on that. Again, this is for the Market Watch Best New Ideas in Money Festival, where we will also have 5 sessions for you. I'm going to talk to Chris and Harold about model book stocks. Also have a session with Jim Ropel on how he's been able to ride the wave of true market leaders. We'll also talk to Justin and Chris about swing trading strategies. And Justin and I have a session with someone from Market Watch, someone who's on their technical analysis team, to talk about tips that you need to know when utilizing technical analysis. And because I said we got 5, Nancy Davis of Quadratic Capital is going to be talking to me about the options market and volatility. So a lot of great content headed for you there, Ken. It's going to be a fun week next week.
That sounds like some great content. I'll be there in spirit, but safe travels.
Yeah, and also want to highlight that we are still having our MarketSmith free access week for another couple of days. So we always talk about how important having a screening routine is, especially on the weekend, keeping a finger on the pulse of not only the overall market, but keeping our watch lists fresh. So if you want to try out MarketSmith to see if it's a screening routine that you want to start adapting on the weekends and beyond, definitely encourage you to check that out. Go to investors.com/ms, free access for all the details. Ken, what do you think? MarketSmith, I mean, it really is helpful not only for that weekend routine and in-depth screening, but it's something that we utilize every single day on our team.
Yeah, definitely. There's a lot of tools that MarketSmith that I don't use yet because there's just so much in there, but pretty easy tool to develop a routine with. And you don't need to be an expert in chart analysis. We've got pattern recognition in there, and like I always say, it's just a great place to do all of your fundamental and technical research in one place. So it's just a great time saver.
Yeah. All right. Well, check that out. And we all hope you have a very great weekend. We will see you right back here next week. Have a good one.